Hello and welcome to Business Incorporated live on Channels Television. Here are the stories coming up today. Zimbabwe's inflation rate rose sharply in January in both US dollar and local currency. We see in Ghana's the petroleum fund investment that surges to $1.4 billion. Plus, we discuss the food markets in Nigeria as tomato prices crash. And it's great to have you join us. I'm Laddie Williams. Let's get a quick check on what's playing out with the markets now. We see Brent crude futures, that's up about 0.45% at $77.43 a barrel. US WTI intermediate, that's intermediate crude, up 0.41%. Price still at $73.47 a barrel. In the metals market, we're seeing spot gold there. That's unchanged at $2,738. US gold futures, that was up about 0.20%, $2,743. That's up. But other metals we track, we see it's red across board. That's for platinum, palladium, and spot silver. That's spot silver. That's been on downtrend for a while now. Let's get a check on what prices, that's price levels to actually watch. We're talking about resistance for oil and support zones for most of those prices. Joining us for that, we have Sunil Dixit, technical research analyst at SK Charting, joining me via Zoom. Hello, Sunil. Great to have you.
Hi, Larry. Thanks.
Yeah, so I spoke with you earlier today, and I see you have some support and resistance zones to watch. Let's start with oil. What are the charts telling you about oil prices?
See, oil prices have been declining consistently for a couple of days, and on 4-hour time frame, we can see prices declining in a parallel channel. And nearest support we can see is 72.70, followed by 71.80, and the good support down there is $71. And for upside breakout, if price stabilizes above 73.80 and crosses 74.30, then the breakout can immediately test 75.70 zone.
All right, so
short-term trend may be bearish, but on the long term, oil is quite bullish, and ambitious targets can't be ruled out to test 77 and 85 in midterm.
All right, from what you're seeing so far, do you think it's going to be positive this week at the close of trade for Friday? That's for the oil market. Are you seeing a weekly gain or a weekly loss?
I think it will be sideways because the range breakout may not happen this week. This range has to remain before any significant move upwards.
And do you think oil traders, how close do you think they're watching Donald Trump at this point? Because we did see Donald Trump did call for lower oil prices. He did, talk about OPEC, hoping that they would lower oil prices at some point. So do you think traders in the oil market are getting quite nervous now, waiting for what President Donald Trump is going to say next?
Oil traders have been quite nervous about the potential outcome of Trump's insistence, as Trump has already spoken to OPEC members and insisted that oil prices be brought down.
And if the president is insisting that oil prices come down, is it like magical that for sure these prices will come down? Or do you think the markets are going to do otherwise and take the prices up?
I think on the downside, the 71 level is a good support, and this may hold for quite some time. And the upside breakout above 71, 75, 70 would be a great breakout point for further upside.
All
in
right.
near future.
Okay, let's look at gold now. You also told me about the resistance and support zones. That's for gold prices around $2,755 to $2,760. Tell me about these points and what you think will happen this week with gold.
Well, there has been a very interesting incident in gold recently. Uh, Price approached the record high zone of 2790 as the metal made a high of 2785, and there were increasing bets that the high will be broken. But uh, it's not a surprise that price didn't break the high 2170, 2790. It witnessed a sharp decline from 2785 itself, and we witnessed a drop to 2730 yesterday. Now, immediate resistance band is 2755 to 2760. If that zone is broken, then bulls might be in control for another retest of 2785. And unless 2785 and record high 2790 is not cleared, sellers will again hammer the metal down. And on the downside, break below 2730 will open way for 2710 and 2700 very soon.
All right, we'll definitely keep watching those prices. I know investors are also watching out for the first monetary policy meeting from the U.S. That's coming up tomorrow. Investors will be bracing for that, and I'm sure markets will definitely be reacting. So according to SK Charting, price levels to watch for oil, resistance zone, that's $73 per barrel. Then for support zone, he's seen $71. For gold, the resistance levels, 2,755. 2,760. That's for resistance, but for support, $2,730. Thank you so much, Sunil Dixit, for bringing us up to speed on what's going to happen with most of these metal prices. Thank you.
Pleasure meeting you, man.
All right, to other stories now. We see the governor of the Central Bank of Nigeria, Mr. Olaimi Cardoso, has announced that forensic verification to clear all pending foreign exchange backlogs are now completed and payments will commence soon. Speaking during the launch of the foreign exchange code, Mr. Cardoso lamented how it took the bank over 12 months to clear the $7 billion foreign exchange backlog in 2024. The Apex Bank boss says the era of multiple exchange rates, which accorded privileges to select few, is gone, and all deposit money banks who flout the ethics of the foreign exchange code will face sanctions. So definitely so much to watch right there in the FX market there with the governor. And, you know, definitely it's all about interest rates at this point, and we know the central bank governor is going to be vocal, you know, going forward in 2025. All right, so the president of the African Development Bank, Dr. Akinwumi Adesina, says 145 million Africans will have access to electricity by 2030. Dr. Adesina made this known at the ongoing Mission 300 Africa Energy Summit in Dar es Salaam in Tanzania. The AFDB president stresses the importance of collaboration between African leaders and development organizations to make this a reality. Take a listen.
First and foremost is their countries. So it's got to be country-led actions that actually shows that they are going to deliver electricity to their people. And secondly is that being their country, they have to increase the budget from their own fiscal budget to support infrastructure, power generation, power transmission, power distribution. They are the ones that are going to make sure that they fill the last mile connectivity there to make sure that people actually have access to electricity. We have to make sure that we have good independent utilities, procurement systems that are transparent, that are competitive. We've got to make sure that we're looking at least cost basis of generating and transmitting energy. We've got to make sure, Ajay mentioned the whole issue of regional distribution. It's not just each country, it's regional transmission lines that make sure the regional power pools are working. So those are the kind of things that they have to do. And two things we are expecting from this particular summit is that the energy compact for each of the countries will be signed. We have 13 countries that are going to be part of that, and that will allow us to do 145 million people with access to electricity by 2030.
All right, now let's get a check on what's playing out in the markets. Starting with the African continent, we see it's mostly negative at intraday. We see markets for the NGX. Definitely, the NGX had a good outing yesterday, and we're definitely hoping that continues today. But from the intraday numbers, 0.55 percent down, 103,841 points. That's for the NGX, losing that 104,000 level in South Africa, 0.16% up, 84,322 points. So yeah, there you have it there for most of the markets in Africa. It's mostly negative. But let's unpack some earnings now. It's earnings season, and most of the corporates here in Nigeria are already dishing out most of those reports. So we see for the Q4 and full year, we're going to be focusing on consumer goods today. Cadbury Nigeria PLC reported a loss after tax, about 10.4 billion for the year ending December 31st, 2024. That's about a 45% reduction compared to about 19.1 billion naira loss recorded in 2023. Then for Guinness Nigeria, they reported a 20 billion naira profit 6 months after the Toleram takeover. So definitely that seems to be working out, for the company. So to help us unpack these numbers, we have Bolade Agbola. She's an investment research analyst at Chapel Hill Denham. Great to have you on the show. Good afternoon.
Good afternoon. Great to be here.
So yeah, looking at those numbers, definitely focusing on consumer goods at this point. Let's look at Cadbury now. What do you think contributed to the 45% reduction in their loss after tax for the year 2024?
We highlight that, Q4, if you look at the Q4 standalone performance, it was positive as we saw improvements in revenue. But, even despite the higher cost of sale, operating expenses, the company was still able to post profits in Q4 2024, which we attribute to a much more stable currency in that period. And given the expectation that this stable currency will continue into 2025, we expect that they will have improved earnings. So the Q4 positive performance in Q4 is what supported full year 2024 performance, that there was a reduction in loss, compare the loss for 2024 to compare it to 2023, it was much better. So we are seeing signs that if we have a stable currency, some of the consumer goods performance would continue to improve into 2025, which is the same thing that we saw in Guinness, although Guinness, because of the calendar year, is it's their H1 2025 that was a loss. But if we look at October to December period, we also saw that it recorded significant profit, about 11.5 billion naira. So we would expect that going forward into the year for Guinness, which their end of the year is June, they will post profits, given a much more stable currency and improved revenue, as well as effective management of costs in the period.
So, looking at these numbers, and, definitely you alluding to the fact that if the currency stays stable, then I guess these companies are out of the woods, when it comes to, most of the losses that we've experienced in 2023, coming into 2024. So at the end of the day, if the currency stays stable, I guess it's all good.
Yeah, I would expect it that, it should be all good, especially for companies that have taken drastic steps to remove FX loans from their books, and companies that are implementing policies or strategies in terms of product mix, and also in terms of operational efficiency. So we'd expect that, full year 2025 will be positive for every consumer goods company, and in 2026 we'd expect that they will return back into paying dividends, and even some in 2025 we expect them to pay dividends at the end of 2025. Yeah.
Right, and talking about dividends, at this point, I saw the banking stocks were on fire yesterday, with the counter rising a lot, and most of the banks there with the likes of FBNH also, adding to their share price. What do you think is going on at this point? Is all attention shifting to the banks right now?
For the buying sentiments that we're seeing in the banking sector as of yesterday, two major highlights are what is driving the positive sentiment. First is the positive notion about capital raising in the sector. Yesterday we saw Zenith also, release that they've been able to raise the capital that they applied for last year, and then it's been approved. So that's one of the reasons, which we believe that the investors are, buying into the stock. And secondly, is positioning for full-year dividend. We expect that the full-year dividend for banking stocks will be higher in comparison to full year 2023. And we've seen this trend as of their H1 dividend release, specifically for GTCO Zenith, which declared one-era dividend in H1 2024, which is 2 times higher than what was declared in H1 2023. So I believe those are the two reasons that investors have been buying into banking stocks.
Right, and with this sentiment right now, I guess investors are chasing most of those dividends. How do you think it's going to play out for the all-share index in this first quarter of 2025?
For the all-share index, I believe it is going to be positive, especially the fact that, like I said, in terms of earnings of the banking sector, it's going to be good, and we see some recovery in the consumer goods sector, which would spur buying sentiment in that sector. And this combined because most of the tickers in the banking sectors are like large cap tickers, so we expect that to support the positive sentiments for the overall market in H1 2025.
And, looking at today, we're seeing, at intraday, market was down about 0.5%. Is this an indication of profit taking? And do you think that's continuing to the close of trade today?
Yeah, so we'd expect that the market will close in the red today. And we saw that profit taking is on tickers that has gained significantly, and especially banking tickers. Apart from the gains we've seen yesterday, if you compare the current price to the offer price at when these different banks came to the market to raise capital, there's been a significant increase. So the listing of shares of the listing of the new shares would definitely expect that investors will take profit given the significant increase. However, we don't expect it to be so aggressive as we expect that investors will also position now so that they can partake in the dividend that will be paid in full year 2024.
Right, and I'm sure some investors have their eyes on MTN Nigeria. At this point, it did, give a couple of gains last week and about 2 weeks now. What are you seeing for that stock?
For MTN, I believe that the positive sentiment about the implementation of the tariff, which happened in February 1st, is positive for the company, and because by Q1 2025, we'll be seeing the positive impact of it in terms of revenue and in terms of earnings. And I believe that this would overshadow the expectation of a not so impressive full year 2024 result, and that will continue to foster buying sentiment in the stock going forward.
All right, we'll keep our eyes on that one. But are you seeing any surprises coming, for the market in the short term? January is almost over now. We're getting into February. What are you seeing for February?
For February, I also think that because we'll be seeing much more releases, and expectations of most companies that will be releasing is quite positive. That's for the full year financials. I believe that that would spur buying sentiment in the stock, in different stocks in February, both the banking sector, the consumer goods sector, the industrial goods sector, and expectation of improved dividend or dividend payments for 2024 full year would also spur activities in this sector. And for 2025, like going forward into the year, we also expect we don't expect significant surprises, even for the banking sector, which we believe that we expect a moderation in interest rates. We don't expect it to be that such a sharp drop that would result into single-digit levels in 2025. So we still expect that earnings will still be good for the banking sector in 2025, and we believe that that would spur activities in the markets in 2025 and for 2025.
Right, and in 2025, what sectors do you think might end up being the laggards when it comes to attention from investors?
I didn't quite get what. I think I did.
Yeah, what sectors do you think will be the laggards when it comes to investor attention going into 2025? We had the winners in 2024, but at the same time we had stocks and sectors that didn't do too well in 2024. What are you seeing for 2025?
So I would not say laggards. So in terms of the 5 major sectors under coverage, talking about the banking sector, the industrial goods sector, the consumer goods sector, insurance sector. So I expect that in 2025, we might not see significant buying sentiments, in some sectors in comparison to the others, because different things drive sectoral performance. For the banking sector, we still expect earnings to be good, and so we expect buying sentiments in the sector. For consumer sector, it's more of a recovery year for them, so there will be buying sentiments in the sector. For the insurance sector, we've seen the bill being passed for the recapitalization of different companies in that sector, which we saw was a catalyst last year, and we expect that in this year, because of how fast the regulator wants this recapitalization in the insurance sector, we expect it to drive that the bill is approved and becomes an act, and then we'll see some buying sentiment. We'll see continuous buying sentiment, because currently we are seeing profit taking for insurance sector. So for oil and gas sector, we also expect positive sentiment in that sector to be driven more in terms of volume production rather than oil price, and also innovations by the companies in that sector. So generally, the sentiment is largely positive, even for the industrial goods sector. So I cannot say there is a particular laggard in terms of sector. Maybe in terms of stock, that's where we can talk about much more laggards and in comparison to the others.
All right, we'll definitely keep watching and see which ones outperform in 2025. I was talking about most of the stocks. Thank you so much. That was Bolade Agbola, an investment research analyst with Chapel Hill Denham. Thank you so much for coming on today.
Thank you very much for having me. Thank you.
All right, let's get a check on all the markets now. Get a check on the Middle East to see that's for still in Africa, EGX. That's Middle East, Dubai, 0.06% up. So it's mostly positive sentiment we see. In the Middle East, Abu Dhabi, 0.16% up, 9,567 points. Other markets we track then, Saudi Arabia and Qatar, also positive with the Saudi Arabia Tadawul there, 0.72%. A big jump at intraday, 12,461 points. And we take it on to Asia now. We'll see Hong Kong stocks rose after Wall Street saw a massive drop in shares of tech companies, while several Asia Pacific markets were closed for the Lunar New Year holiday. So we see in the Nikkei 1.39% down, big drop there, 39,016 points. Kospi more convincing, 0.85%. Hang Seng Index, 0.14%. Other markets we track in Asia there, also not looking bad, but the Nifty 50 is holding up 0.64%, 22,976 points. Let's get a check on the U.S. futures now. The stocks were hammered yesterday with the trade. It's all about dipstick there. That rattled investors in the market. Dow Jones Industrial Average is up 0.12%. That's for the futures market. The S&P 500 0.42% up, and the tech-heavy Nasdaq, they got most of the beating yesterday. That's up 0.72%, 21,841 points. So definitely, I guess investors are expecting some kind of recovery. But will that continue this week, knowing that the U.S. Fed They're going to meet tomorrow, and we're going to get the decision. That's for interest rates in the U.S. That will be the first one for 2025. So definitely investors will be looking out for that. They know what the body language is at this point. They're expecting about 2 rate cuts in 2025. If it was supposed to be about 4, but will that hold? We'll definitely keep watching to see if the U.S. Fed might actually surprise, because we know Donald Trump is asking for lower rates in the U.S. We'll see if Jerome Powell will actually be a fan of that. Well, we'll take a break now. When we come back, we're going to head to other markets that we track. That's in a moment. Just stay with us. Welcome back. Well, let's get a check on what's playing out in London. We have Juliana joining us right there in the UK. Great to have you, Juliana. It's been a while, but we have data out there. House rent prices outside of London, we're seeing that drop. Talk to us about these numbers.
That's right. Can I just say, yes, it's really nice to speak to you. I can see you. You can't see me.
Right.
I'm really looking forward to seeing you and the viewers real soon. Don't worry, I haven't gone anywhere. But no, this is, I suppose, some light relief for renters in the UK, because believe it or not, the cost of living is still a massive issue for millions of people around the country. And one of the significant contributors to a tough cost of living, as we all know, is how much you are paying to live in your property. And rents in the UK have been really high. In fact, I think one of the fastest growing sectors as we came out of the COVID lockdown was the rental economy. Lots of landlords getting in to the buy to let market. So good news for a large proportion of British society that live outside of the British capital. And that news is that rental prices have dropped. This is data that was released by the rental property group Rightmove, and according to them, the average monthly amount somebody would pay living outside London is £1,341, which is down 0.2%. That's obviously not much, but it does show that the pace of growth continues to go. And in fact, I think that 0.2% is the fastest, or should I say the largest amount of decline since the lockdown. So it does go to show that perhaps things are changing. There appears to be a rising supply of rental homes available within the UK. But again, as I always say, this data is relative. It's still incredibly expensive to live in the British capital. In fact, the average sum is about £2,695 a month, which I believe is about 5 million naira. So really pricey, but some glimmer of hope at least.
Yeah, some glimmer of hope there, and I'll definitely be hoping for a time where I'll actually see rental prices actually go down in Nigeria. Definitely looking forward, to that. But yesterday was all about the tech sell-off. Yeah, for most of the markets. How are the UK markets reacting? Right now, are they out of the woods, or investors calmer now in the UK?
I know, it's been so interesting, isn't it? In fact, I don't know if you have. I've definitely downloaded DeepSeek. I'm really interested to know what all the fuss was about. And my goodness, there has been a huge fuss, hasn't there? We saw that sell-off in New York overnight. That hasn't really trickled down into the UK market, although I've got to tell you, as it is everywhere, it's still a big story here. It was wall to wall on the news yesterday, but of course, as we know, FTSE 100, the blue chip index, is less tech heavy compared to other major stock markets like the Nasdaq. So the actual all share in London is up. It's up 0.51%. FTSE 100 up 0.58%, and the FTSE 250, the domestic market, that's up 0.74%. But again, a lot of these indexes are exposed to energy, mining, and financial services, not necessarily tech. But again, this has now become a sort of geopolitical battle, hasn't it? We know that Trump already in his first week has made staggering announcements. And yesterday, I called it a slight glimpse of some of his comments on DeepSeek, the fact that America should have been first with these cheaper, more accessible AI models. And we know that Britain was the first country in the world to hold an AI security summit. So tomorrow, when Sir Keir Starmer is at the dispatch box in the Palace of Westminster, I certainly expect the leader of the opposition, Kemi Badenoch, to tackle him on this, to find out, if Britain can be in this competitive, ever-evolving AI space, because as we know, it's impacting all of us. So I told you I've downloaded DeepSeek, Laddie.
Right.
I'll check it out this afternoon, and perhaps we can discuss that tomorrow.
Yeah, I'm definitely going to download it too. I'm quite curious at this point to what that DeepSeek can actually do.
You should be teaching me. You should be teaching me, Laddie. You're the tech expert.
Right, I know. But at this point, there's just so much fuss. I was just focused on the markets and the reaction, at this point. But I'm definitely going to try it out and see what DeepSeek can do. Thank you so much, Juliana.
Thank you, Laddie.
All right, now let's turn to Europe, where despite massive sanctions against Russian energy, the EU continues to import LNG from Moscow, and at a record high. I see 2024 recorded a big increase, up about 6 times than the year before. Has the EU circumventing its own sanctions, and who are the key players? For more on this, I have Varda Imrach there joining me from Berlin. Great to have you, Varda. Okay. All right, Varda, I don't know if you can hear me. Okay. All right, we'll get back to Varda. Let's get a check on what's playing out with South Africa. Now, we see statistics. South Africa has unveiled the findings of its income and expenditure survey. That's the IES, a vital study offering a detailed look at South Africans' spending patterns, income sources, and living conditions. The survey, conducted during the 2022-2023 period, plays a critical role in updating the Consumer Price Index basket. Announcing the results, the Statistician General, Rasenga Maluleka, revealed that South African households recorded a total annual consumption expenditure of 3.0 trillion rands in 2023. However, he highlighted a concerning disparity. Female households earn significantly less than their male counterparts. Take a listen.
In 2023 was sitting at 4.3 trillion. The average household income was sitting at 204,000, and of course the median was sitting at 95,770 rands. And when you use the median, it helps us to see where the bulk of those who are having income at household level are. So if you were to stretch from the one with the lowest household all the way to the one with the highest household, we would see that the ones with the lowest household are much more. And that is why when you use the median, you actually move away to get the middle point much more lower.
All right, get back to Berlin now. We have Varda Imrach joining us. Great to have you, Varda.
Thanks for having me, Laddie. Can you hear me now?
Oh, yes, I can hear you perfectly clear. So give us the latest updates on this now. What are the numbers telling us about how much we see the EU is still importing, from Russia despite the sanctions?
Well, Laddie, the numbers tell a bleak story. It's a story of continued dependency for energy imports, and it spells out just how many holes there are in the sanctions. The latest data from 2024 show that Russian imports were up 11% from the year before. That's according to think tank Institute of Energy Economics. This is alarming considering that Europe's largest imports came from the US, and those dipped a bit in 2024. And then there's another story that's that's at the center of this, which is the role of German-owned company SEFE. This used to be a subsidiary of Gazprom, the Russian natural gas producer, which is also one of the world's largest LNG suppliers. There are ongoing contracts with Russia which allow energy imports to flow easily to France, for example. Europe has not imposed a legal obligation to terminate these contracts, and even if SEFE does not take the delivery, it still has to pay for it. This might prompt Russia to take this money and still resell this LNG elsewhere. So the EU has decided to take it. That's what the narrative is, but it's not that simple. In the first 15 days of 2025 alone, the EU imported 837,000 metric tons of LNG from Russia. That's 70,000 tons more than the same period last year. That's according to commodities intelligence company KPLER.
Right, that's quite interesting. But what are the efforts, being made at this time in Germany or the EU? How are they trying to avoid all of this?
Well, if we talk about Europe, there are certainly countries that are dependent on these imports, like Slovakia and Hungary. There was an agreement that ended on January 1st this year, and this agreement allowed Russia to pump gas to the EU from pipelines that ran through Ukraine. Now, Kiev has said there will be no more extensions, and now tensions between Ukraine and Slovakia are escalating on this topic. At a meeting yesterday of EU ambassadors, the European Commission director said it was ready to continue discussions with Ukraine on the topic of supply of gas through these pipelines. Ukraine has offered Azerbaijani gas to flow through to Europe. The EU also announced that it has renewed its wide range of sanctions on Russia. They say it will deprive Moscow of revenues to finance the war. I assume they're talking about new finances because Russia is still getting paid for these old EU contracts.
All right, let's turn to the markets now. What are investors looking at today in Europe?
Well, Laddie, investors here are breathing a sigh of relief because European shares edged up today as yesterday's pressure eases after a global market rout, which was sparked by DeepSeek, China's AI startup, which is making headlines, by the way, across the world. This Chinese company has spooked investors in the US, where major AI companies have been enjoying relatively little competition. And investors are still reeling in from the NVIDIA debacle of yesterday. But for the first time, Europe is benefiting from not having any major stake in the AI game. Although the European Technology Index was trading 0.3% higher. The DAX is up 0.4%, and Stocks 600, made up the 600 largest European companies, was up 0.6%. And the Euro Stocks 50 was up 0.3%. All in green. Now looking closer, Siemens Energy is having a good day with 3.3% rise, and communication companies like Deutsche Telekom and Deutsche Post are also trading higher. Leading the DAX is pharma company Sartorius, which is up 11%. And that's all from us today.
All right, thank you so much. That was Vanda Emrah who had given us details of what's playing out in Europe. Thank you.
Thank you.
All right, now let's get a check on other countries now. We see Zimbabwe's inflation rate rose sharply in January in both US dollars and local currency terms, and that's spurred by food and housing prices. In dollar terms, inflation accelerated by 14.6% year on year after rising by about 2.5% in December. On a local currency basis, inflation rose to 10.5% month on month in January compared to an increase of 3.7% in December. That's according to the Statistics Agency in Zimbabwe. And talking about rising prices, we're seeing price of a staple right here in Nigeria, that's tomatoes. That's actually dropped. In May 2024, tomato prices soared by over 100%, reaching 150,000 naira per 50 kilogram basket. But we've seen the prices drop dramatically at this point in the markets. I don't know if you can feel it if you go to the market, but let's talk to Tomiwa Ajewole now, the analyst, financial derivatives company. Hello, Tomiwa.
Hello, Laddie. Thank you for having me.
So this price drops for tomato, is it real? I hope it's not audio. What are you seeing?
Yeah, I mean, last year it was the total exact opposite. We saw prices skyrocket to about 150,000 naira for 50 kg baskets. and everybody thought it was the tomato Ebola. But if you did talk to some tomato farmers, they would let you know that it was more or less the seasonality effect, where we're not in the harvest season for tomatoes, so supply was low, and which led to higher prices. And now we're seeing the exact thing happening just in the opposite side of it. We are currently in the peak harvest season for tomatoes, so there's increased supply of tomato, and we're seeing prices crash. But for this particular situation, we can also look at it from another view. If I was a tomato farmer when prices of tomato was about 150,000 naira, which is an 100% increase, that is enough incentive for me to want to produce more tomatoes. Then everybody was calling tomato gold, 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 and we all know about the gold rush. So, as a tomato farmer, I would want to shift my production to tomato. Also, other products then like ginger and things were having issues. So, it just made me to like basic economics also let us know that the higher the price, the higher supply. So I think my view is that a lot of farmers shifted production to tomato, and now we're seeing this huge supply glut, and that is what has really, really crashed down prices.
So you're telling me if I go out to the market now, try to buy tomatoes, I'll get a good amount for not as much naira as I was paying before?
Sorry, come again?
I said if I go to the markets now, you're telling me I'll get a good load of tomatoes with maybe 1,000 or 2,000 naira. Is that what you're telling me if I go to the markets now?
Yeah, prices have really come down.
They really come down. All right, what's happening with post-harvest losses? We know that's still an issue. Even though there's ample supply, are we able to store, for, future use? That's for the farmers.
Yeah, or post-harvest loss is a big deal in Nigeria. It's estimated about 40% of tomatoes don't actually reach consumers' table; they just get wasted. And when you look at the huge food inflation figures in Nigeria, the high level of food insecurity, it makes little sense. But Nigeria is not the only country that faces post-harvest losses. In India and UK, several countries have had to do with post-harvest loss. And one common thing that helps to alleviate post-harvest losses is just cold chain facility, cold chain technology, cold chain infrastructure. And when we say cold chain, we're talking about any technology facility or system basically that helps to keep the temperature of what is being kept there. So, we're talking about refrigerators, and one important initiative that we see are trucks that are all these refrigerated trucks. So this helps to keep the tomato produce fresh and is able to go to the consumer's table. Of course, in recent years, we've seen little progress in Nigeria's cold chain sector, but infrastructure deficit is still a huge constraint on that sector because we are going to have a cold chain facility, you need good power supply, and again the roads are bad, so the trucks have issues. So if you have good infrastructures in place, talking about easy and increased supply of energy, we have good roads. We see growth in the cold chain sector of the country. Post-harvest loss might just be a thing of past for Nigeria.
All right, so we'll take I'll get back to you now, Tomiwa. We're going to be joining the live coverage there for our DSTV viewers. The Commissioner of Roads in Amuodofin local government area of Lagos State. But if you still want to continue watching this, you can watch on other platforms. That's on DSTV. So, yeah, Tomiwa, let's get back to the stew right now. So I guess we can all go back to making our stews again now that the prices have come down. But talk to me about the value chain now. Tomato paste, I know we're a big importer of that. Are we making any improvements when it comes to producing tomato paste here in Nigeria?
I mean, we still look at Nigeria's agricultural sector, that we're still in the process of developing. But, there's reason to have few hope. Now that the exchange rate is stable, we believe that manufacturers will be able to import facilities that are going to help for the processing. So, but in the near term, of course, we expect the exchange rate to remain stable. So that's incentives for manufacturers and importers to import goods, the machineries that they can use for processing. So with this, we expect to see entrepreneurs and investors entering that space where we get the equipment and technology we need to begin to process all our raw inputs, because it makes no sense if we're one of the largest tomato producers and we're still importing huge tomato paste. It's the same thing we saw in the oil sector. We're seeing major transformations there, which is helping Nigeria's current account surplus and export earnings. So if we can bring that also to our agricultural sector, the sky is just a starting point for Nigeria's agriculture.
Right, I guess it's great. We now have refineries popping up in Nigeria. So I guess for the oil sector, that's getting sorted. Hopefully, get better going forward. So now we need to look at tomato paste industry. Let's process more and produce more tomato paste, since we're a big producer of tomatoes. Thank you so much, Tomiwa Ajewole, analyst with Financial Derivatives Company. Thank you.
Thank you for having me.
All right, let's get to West Africa now. We see the Bank of Ghana has released its report on the performance of Ghana's petroleum funds for the second half of 2024. The report revealed a significant increase in oil revenue and a substantial boost to fund allocations as growth in investments in Ghana's petroleum funds that reached $1.4 billion. According to the report issued under the provisions of the Petroleum Revenue Management Act, a total of $543 million was received from crude oil lifting during the period. All right, now, let's get a check on what's playing out with the markets now. From deep red yesterday in the crypto market with sell-offs due to deep seek yesterday, it's back to green in the crypto market. But I guess the question now is, will this recovery continue, or is it just a blip, or just a pause in the sell-offs? Definitely we'll find out, but the markets are fully in the green, with XRP jumping a big 10.62%, TON, HBAR, Ethereum 4% jump, Bitcoin a recovery there to 3.7% up. But it remains to be seen if Bitcoin can break above $104,000 and stay above it. Then we might see maybe a bigger move up to maybe 107,000. That's according to analysts that track and chart this market. But let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon.
Good afternoon, Ladi.
Good afternoon, Solomon. So, yeah, the state of the market now. We're seeing Trump. That's the Trump-backed Liberty Finance. Keeps buying Ethereum. They just bought another $10 million of Ethereum today. What's the reason for that? What are they seeing with Ethereum?
Yeah, well, everyone is quite curious at this point in time, but we're expecting some big news from them. They've been accumulating, and so far they are holding over $170 million worth of Ethereum, which is quite huge, and their overall crypto portfolio is way over $200 million. So we're actually waiting to see, because it's his kids running this platform, and he's backing it, and we know he's a pro-crypto president. So we can't wait to hear what they have for us and their plans. And one of the sons have actually hinted that people should expect something quite massive, and we're waiting right now. All fingers are crossed. But it's actually good news that they keep buying and they keep defending the $3,000 Ethereum support level. So that's actually quite nice.
Right. So we're seeing the attention to the Liberty Finance there, but it seems not much is going to the Trump family meme coins at this point, from Trump to Melania, because they're still down at this point. What do you think? What do you think they're going to do next with the meme coins?
I didn't get the question. Sorry.
What do you think they will do next with the meme coins? That's Melania and Trump's meme coin.
Yeah, well, for the meme coins, we're still waiting. There's a rumor that they're trying to push for an ETF based on the Trump meme, or I have not yet verified that. But then again, I wouldn't be surprised. But what I'm expecting is I will expect more influential figures in the US to come out and launch their own meme coins. Yet since right now they're still trying to be quite careful, and also try not to restrict the growth of the crypto ecosystem. So I think they'll try to experiment as much as they can with these assets till they find out what works within the next few years.
All right, so looking at that meme coin space, and with most of the celebrities, celebrity-backed meme coins, we've seen the likes of Davido, other celebrities, across the world. They've, brought most of these meme coins. Then we had the Trump and the Melania meme coin. But when Trump was asked about the meme coin, he technically didn't know much, about it. So I'm wondering, is there some kind of group that, brings or develops most of these meme coins, and they go to these public figures and say, you know what, why don't you tweet about this meme coin and we make a good load of money? Is that what's playing out?
Yeah, well, the thing there about the meme coins that attracts most retail investors to trade them and buy them is based on the crazy returns Yeah, meme coins is where you can easily turn $50 to $500,000. So when people hear stuffs like that, they are drawn to it. Even people that have good intentions and bad intentions. And at the same time, to meme coin is where you can invest $1 million and in the next 10 minutes, that $1 million is now $10. Yeah, so most persons is the volatility, the risk to reward, that's what attracts them. And yeah, sadly, most of them, these celebrities that have also attempted to launch meme coins, some of them, they were used because they are not really exposed and they have no idea about how this thing is done. And so they tend to do it the wrong way. And most also end up making their followers and followers lose their funds too. So I would say meme coins are actually quite interesting. A whole lot can be done and built around meme coins, but right now most persons are not doing it right. So it's quite exciting that Donald Trump was able to leverage on this, and we're all waiting to see how he can explore the possibilities of meme coins and also how other prominent figures can also do the same thing. But we strongly believe the meme market is worth giving it a try.
But it's quite interesting, when you check maybe Solana chain or some of the Solana exchanges and you check some of the price action for most of these meme coins, you see they're already up 10,000%, up 14,000% in just about 24 hours or maybe month to date or whatever. But I'm wondering if there are investors that really catch it before it makes these moves, or is this some kind of manipulation we're seeing there?
Yeah. The fact remains that the investors and the big players, they are the ones that benefit the most from meme coins. So a brief example is if you look at Solana ecosystem, the Solana chain, about 85% of the transaction volume there is generated based off meme coins. So if you eliminate meme coins from Solana ecosystem right now, the transaction will drop by at least 80%. That shows you how powerful it is. If you look at the centralized exchanges, especially the decentralized exchanges on Solana, how did they make most of their fees? If they made $30 million as profit last year, about 80% of that money, you see it shows you the power of meme coin trading. And also when you look at the liquidity pools to people making profits there, is off meme coins trading. So the investors, trust me, they make crazy money from people trading memes. And that's why they're looking for smarter ways to innovate around it.
And definitely we have the ones that also lose crazy money trying to chase most of these memes. All right, we'll keep watching to see how it all plays out. Maybe it becomes a meme world at some point. Thank you so much, Solomon Amunde, financial market analyst.
Thank you very much, Laddie.
All right, there you have it. Are you going to meme or not? Well, definitely so much to unpack today with the markets. And as it seems, we're seeing a recovery, at this point. Will it continue until tomorrow and the rest of the week? We'll definitely find out. Keep your eyes here so you know where to pack those funds. Thank you for watching. I'm Laddie Williams from me and the team right here at Channels HQ. It's bye for now.